Good morning, everybody. It is Friday, March 31st, 8:30 a.m. I'm Charting Man Dan, filling in for the wonderful chart gal Lori, sending her the best, hoping she has a speedy return sometime in the next week. We got the end of the quarter today. End of the month, end of the week, lots of ends. So I've been talking about my endless internet issues recently, and right before going live here this morning, my laptop just died out of nowhere. But we're rolling with the punches. I don't know what the planets are doing in their alignment, but I got the opposite of Midas touch for technology right now, that's for sure. So we are going to look at the pre-market setup here, a couple trade setups that I'm keeping an eye on. One thing I want to make note of before we get into the rundown here is I'm seeing on social media a lot and, in conversations of traders talking about the current move that we're seeing in the S&P 500 and talking about the really low volume. And I just want to address that a little bit because my experience with the S&P, or notably SPY. So my experience with SPY and volume going back years, I learned technical analysis and trading that for convincing bull moves, the prove it indicator is volume. If there's volume increasing, you trust the bulls, they show follow through, and that's the way that I trade. And I use that in all of my trading. But I learned in 2016 and 2017 that you can go up in the S&P 500 on declining volume. And I know people say this is a different market environment, Fed, yada, yada. That's fine. You can have that opinion, but I'm just sharing my experience and my viewpoint. And it is that we had significant rallies of all-time highs in the S&P 500 in 2016 and 2017, all on declining low volume. And so I then shifted my perspective because I had trouble trusting the bulls in 2016, 2017 because of the volume. And so I learned from that experience to treat the S&P 500 differently than individual stocks. For me, I just shifted to say, okay, the broader market does not need increasing bull volume to keep going up. It can do it on low volume. It can have a low volume grind up. And I just shifted my perspective to say I'm going to treat individual stocks and individual trading instruments this way, and I'm going to treat the broader market, the S&P 500, this way. I treat them differently because of this experience. And so that's how I'm approaching current price action. Yes, bulls would prefer to have increasing volume, absolutely, but I'm not sitting here saying that I'm not trusting this move because there's no volume behind it. I'm just saying I'm keeping an eye on the higher lows, the price action as my guide, and for me, it's not required to see notable bull volume for the bulls to grind up and keep full control. So S&P 500 futures chart, looks like we just got a little pop-up here on pre-market data. So we're up to the highs. Again, we're just grinding up. We're just keeping these higher lows and higher highs going. And that's just my perspective. Keep it as simple as possible. If the daily time frame on the S&P 500 is setting daily higher lows, I am bullish. And when that changes, I will shift my perspective. And we have a lot of space now where we can form another higher low next consolidation. So we know daily consolidation will be inevitable. I'm not sitting here, fighting the bulls every day looking for a daily pullback. But when it happens, we could see the S&P 500 drop 2% and still look for a daily higher low. So that's the way that I'm keeping it simple with my broader perspective of the market. If we're setting daily higher lows, I'm looking long. And then I will shift. When we lose the daily higher lows, that will be an indication to me to shift my perspective and take a step back. So I'm looking at a daily uptrend. I'm zooming into the 4-hour on the futures chart. We got a 4-hour uptrend as our short-term guide now. And we know that we're not going to see any daily consolidation as long as we keep setting these 4-hour higher lows. So now the low of pre-market is a key level for me in the short term on the S&P 500. As far as resistance is concerned, we're looking back. We already broke the FOMC high. So now we're looking back at this high from early March. And if we're going to see what level that is on SPY, that level is up at 407.45. Actually, let's adjust for the dividend. 405.90. And I adjust for the dividend because the dividend is an artificial change in price. So 405.90 is now in play as the S&P 500 bulls try and get to the highest price that we've seen in the last couple of months, last 6 weeks. No, last month. 6 weeks, yes. So there's a little double top there. You can see this top in that top in play first thing this morning. There's a gap to fill at 406.59 as the next little level. But again, just all bulls as long as the hourly uptrend is intact or the 4-hour uptrend, whatever you're using on the futures chart, both can certainly be useful. And this is our third gap up open in a row. So with a 3 gap up bearish, it is a bearish reversal pattern just because it shows us, bulls getting extended in the short term. But just be aware that the characteristics of that bearish reversal pattern do not require a red day on the third gap up open. It's actually the fourth day that confirms the pattern. So you can have 3 gap ups, and then if the fourth day is a red day, that confirms it's a 3 gap up bearish reversal pattern. So just keep that in mind that yes, the bulls are extended in the short term, and it is our third gap up open in a row shaping up. But that doesn't mean that today's a day to be looking bearish. Obviously, we can pull back from here, but just want to reiterate that it's the fourth day of that pattern that confirms the pattern. The NASDAQ is at the highest level in 7 months. That's a very notable statement for me. When I saw that yesterday when I was making the end of the day market video and we made it that our thumbnail, that was just, for me, I've almost viewed that like the NASDAQ fear is the lowest it's been in 7 months. And that's a significant period of time. And so we're now looking back at the high of back in August for the NASDAQ. And so QQQ is in an area here where we don't have a ton of immediate resistance nearby. Let's see, pre-market, we're seeing the gap up open attempt. We're in the 316s. So again, adjusting for the dividend, looking back here, we're looking up at 319.67. And then we're looking at, if we get over 329, still a ways away, that's 4% away. But if we were to clear 329, we're then at the highest levels in almost an entire year. Again, very notable. And my perspective on the market and what I've made this post on Twitter is, respect the bears, but be ready for the bulls. And, we've obviously got the bulls surprising a lot of bears right now post FOMC. It's just a question of how long does it take to sort out the imbalance. The imbalance being there were more shorts than longs since into the FOMC and post FOMC. And so now it's just a question of how much forced short covering do we see to head higher. A lot of people think this is just a pump into the quarter end to window dress the close. And then, in April, we'll see things shift. Maybe, but one day at a time. And the bulls are in full control in the short term. And until that changes, I'm not looking to try and nail a top. Because again, my perspective with my IRA, as I'm shifting things around and, I'll have a bull lean and then I'll shift it to a bear lean. I'm not trying to nail tops with those shifts that I'm doing. And that's been working well so far this year. I wait for, some kind of signals and indication of a notable shift versus, I'm trying to just short the top here because we're extended. So as a bull, I'm looking for hourly higher lows on consolidation. We have a lot of individual names that are looking for those hourly higher lows. And just using QQQ as an example, so QQQ for me, once the bell rings, anything above 313.93 is an hourly higher low. So I'll be keeping an eye on that support level as a key short-term level. There are a couple bear setups that I am keeping an eye on as well because, I want to have a game plan for both directions as I head into a trading day, and I'll talk about those in just a moment. Let's first run through these commodities real quick. So the dollar trying to hold the recent lows, going to be keeping a close eye on the dollar next week, but it's just a battle of trying to set a weekly higher low, not giving any indication that a weekly higher low is forming just yet, and tightening up a little bit on the daily, but bears still in control with the clear daily lower highs. Again, I'm just treating it very simple. If the dollar is setting daily lower highs, the bears have complete control. When that changes, I'll take a step back and reassess my analysis. Until that changes, I can save a whole bunch of time just making that simple statement and having that mindset. Gold, daily higher low set, heading back up towards resistance. Certainly wouldn't be surprising to set another lower high and see this equilibrium tighten up into, mid next week. But bulls are keeping the higher lows going on gold. And we are bullish gold as long as the daily higher lows keep forming. Silver, up at the highs as well. Playing catch up to gold, testing or approaching a test of weekly resistance of 24.64. We are definitely extended into that resistance test, but bulls are still strong. So silver and gold and miners have been grinding higher over the last couple of weeks. Gap up open in the miners. Hourly uptrend is our guide for GDX. So anything above 32.34 will be an hourly higher low. And we're testing weekly resistance here as well, 33.34, to try and see a longer term break. And again, just like the NASDAQ is at 7-month highs, the bull miners are trying to get to their 7-month highs as well, or it would be 9-month highs. If GDX breaks 33.34, highest levels in 9+ months. Oil still grinding higher as well. Weekly time frame, EMA 12 resistance is about to be tested, but bulls are keeping the 4-hour uptrend in their favor. And in terms of daily resistances, not a ton in this area. I'm looking at 75.02 coming into play. But since the daily trend change to the bulls, which happened at 71.67, a nice 5% of follow through for the bulls at this point. Natural gas, as I keep saying, save the time. It's a daily stair-step pattern with a lower high every single day for 12+ days. And if that's not changing, again, say your time is valuable. You don't have to do all this divergence analysis, looking for clues. Just keep it as simple as you can. If we're setting a lower high every single day, the bears have absolute complete control, and that's just the way that the chart is until that changes, and then we shift our perspective. But until that changes, nothing changes. And I know a lot of people, it's almost like you're looking for, you get your magnifying glass out and you're looking for something that no one else is seeing, and an indication that's going to show you a reversal is imminent. And I personally find that these simple statements are just a whole lot easier for saving time. Bitcoin, bull move in response to pre-market data as well, it looks like here. So I'm watching Bitcoin 12-hour time frame. It's a bit of a megaphone. But one thing that we've learned over the last year of trading in Bitcoin, as weekends have significantly slowed down, there was a period in time where crypto, weekends came around and it was crypto's time to shine because nothing else was trading and it saw a lot of attention. But recently, weekends have been very slow, very low volume. And if you assume a tightening range is going to form on the weekend, more often than not, the probabilities are in your favor to be right. So I'm looking at this 12-hour time frame for Bitcoin, and I'm recognizing, we got plenty of resistance rejections from this uptrend resistance line to be watching, and plenty of bounces off support. But I'm watching for a 12-hour high or low, and then I'm going to be watching for a potential 12-hour lower high. The probabilities that we break bull are a bit higher than to break bear, just because we are in an uptrend and have come off of fresh highs in the past couple of days. But again, it wouldn't surprise me where if we do set this 12-hour high or low and then a lower high maybe overnight tonight, and next thing you know, we're heading into Friday afternoon and we've just got a tightening 12-hour range. So we'll be keeping an eye on that. As far as the crypto stocks, keeping an eye on Riot and MARA and Coin, but they're showing relative weakness compared to Bitcoin recently. We know Bitcoin just hit the higher high and Riot is not breaking that resistance just yet, but pretty close to that resistance. We can see the pullback yesterday and the low of today will be in play this morning. So an aggressive bull is going to be looking to bottom fish off of the lows of today. And if there's confidence in Bitcoin over the weekend, then we should see confidence in these stocks as, if we see Bitcoin go up over the weekend, these stocks will be positioned for gap up opens. But all depends on, can we hold the low of yesterday? You can see MARA is much weaker than Riot. We're not close to the recent high of 912. So if I am looking bullish, I'm looking at Riot. And again, one way to easily compare names, Riot divided by MARA, to show us which name is stronger. And we can see that Riot has been stronger than MARA for weeks at this point. So if I'm looking long in the crypto stocks, I look at Riot. And if I'm looking short in the crypto stocks, I look at MARA. And until that shifts, that's just the way that I trade that sector. And that's something you can do, with your trading. If you're looking at the tech sector, find a relative bull in the tech sector. Let's see. Microsoft been bullish recently? Nah, not a good one. Apple. So Apple's been fairly the same as the NASDAQ. Amazon's had a little bit of relative strength recently. But finding a name that is seeing some relative strength and then another that's seeing relative weakness. Google has been weaker over the last week. Look at that massive drop off. This is showing us that Google has weakened considerably. So if I see weakness in the NASDAQ, I look to the weaker name to short it. If I see strength in the NASDAQ, I look for the stronger name to go long. So having, again, always just a name or two on both sides of the playing field to look towards based on what the broader market is doing. Because, again, the last thing I want to do is be blindsided and say, I'm looking long and this is the play I'm looking long. And then, whoa, the market is showing weakness. Now what do I do? I wasn't prepared for this. I don't have a game plan. We always want to have a game plan for both directions in terms of, all right, well, if we do see, a loss of the hourly uptrend on the NASDAQ today, I'm keeping an eye on Google as a bear. And Google rejected from its key daily resistance and it's tightening up nicely. But that's one of the major reasons that we shifted to relative weakness. We failed to break resistance, and then relative weakness showed itself very significantly. So a couple plays that I'm watching today on the bears side, I'm keeping an eye on NIO. And NIO has been a great bull over the last couple of days. Again, that inverse head and shoulders, confirming the increasing bull volume. It's a very notable move. And this for me, as I mentioned, NIO was it was my most profitable ticker, I think, in 2021, and I haven't traded it much at all recently. And you can see the volatility has shrunk considerably. If you just look at the average daily range, in this period here and even on this drop, and then you look at the average range the last 2 days, it's, you're seeing an entire week plus of volatility in one day. And so that, to me, means this is back on the menu for day trading in both directions. We've got the volume, we've got the volatility, and that means we have the opportunity. So again, if we have no notable volume, no notable volatility, that means there's less trading opportunity, and that's when I look elsewhere for other things to trade. But I'll always come back. As I say, you date tickers, you get acquainted with them, you get comfortable with them, and as they serve you, you trade them, and then once they stop serving you, you move on to the next one. But you can always rekindle old flames, and that's what I'm going to be doing with NIO because of this volatility returning. So we pulled back pretty notably into the end of the day yesterday, and it's still a clear hourly uptrend. Anything above the low of yesterday is an hourly high or low, but a potential setup I'm looking at is, right now I see relative weakness pre-market. And why do I see relative weakness? Well, QQQ is gapping up. Well, let's give him some back here. We'll check on the markets here right before the open just to see where we stand. We might get a 5-minute equilibrium setup right into the open on this data reaction. But we can see QQQ is up at the high of yesterday or right around that level. And NIO is not. It's a few percent under that high. Doesn't mean it can't quickly on the open, head back up to that high. But my point is, there's a multiple percent of space. The bell could ring. We can go up 2.5%-3% and still be under resistance. So a setup that I'm watching for, knowing that, all right, we've just seen a big move. We're a bit extended in the short term, having gone up almost 20% in the last few days. So I'm watching for a potential top fish where if the bell rings and the bulls show up but fail 1075, looking for a short based off that level. And then if we set that hourly lower high, potentially looking for a daily inside bar to take shape today. But I'll know within the first 15 minutes whether that's going to be a viable trade or not, because if it's not going to be a viable trade, we're going to see high bull volume out of the gate, and we're going to see a move right up to 1075 and break it on the morning. And that would tell me, nope, it's not time to be looking bearish on NIO just yet. And we can be looking at BABA for clues. We know BABA led this move, and we see the same thing with BABA. So BABA is a good bit off from the high of yesterday, 105, about 2.5-3%. And if we fail to break the high of yesterday, we're going to be looking for a daily inside bar today. And we know BABA is getting extended as well. The daily RSI is above 70, and we've come straight off the lows, and there was definitely news involved, but that's a 25-30% move straight off the lows. We know daily consolidation is going to be inevitable, so that's one of the reasons I'm looking potentially bearish on NIO. And again, I have to see how the first 15 minutes of trading goes to see if I'm going to take that trade or not. I have to see what the NASDAQ is doing as well. But it's the kind of setup where, all right, I know BABA has daily consolidation is going to be due, and when that happens, NIO is likely going to see daily consolidation at the same time. So it's a name that I'll keep an eye on. If I am trading NIO, I'm checking in on BABA from time to time just to see, is it showing weakness as well? Are we correlating BABA and NIO because they are both Chinese names or not? That's information that I'm going to be looking for as I'm trading NIO. The healthcare sector starting to get a little bit interested here. And again, we did confirm a daily uptrend. It was this inverse head and shoulders. Not a ton of follow through at this point. The bulls really want to head back up and get over 128.78 to try and see some of this follow through. And you can see the EMAs here, the green and the orange, EMA 12 and 26. They're trying to cross bull for the first time since we topped out, a couple months ago. And that would be notable for me as well. So with the attempt at the start of this shift, that's why I've gotten interested in JNJ. over the last couple of days and why I grabbed that bull position swing attempt on the inside bar bull break yesterday. And the reason for that is just I like the risk. The risk is low, just in the sense that, I'll stop out if 150 breaks. There's not a whole lot of risk because we are so low, close to that low, I should say. And so I need to see J&J break 154.54 and 154.95 to start to shift this move. When, or I should say to kick off this move and start the shift. When have we last confirmed a daily uptrend for J&J? And your answer is, way back here when we topped out back a couple months ago. And so that would be the first daily uptrend if we can get over that 154.54 level. So again, my game plan is entry 153.60s yesterday, stop out if 150 breaks. So I will lose $3.60 if I stop out. $3.60 of stock price of J&J. And I'm trying to sell half after a $3.60 move up. So if we get up to 157, just above 157, and start to get this move going and then test weekly EMA 12, which will be right around that 157 area next week, then I sell half. And then once I sell half, I keep my stop for the second half under 150, and I am now in a risk-free trade unless we see, a big-time gap down open on bad news, which is always a possibility, but certainly a lower probability. So that is my game plan. It's worked well with Microsoft and INTC from fear lows earlier this year, and now I'm making an attempt to do it with the healthcare sector. And so we'll see how this plays out. Again, I don't have, a ton of conviction. This is the bottom for J&J. It's just a risk-reward setup that I like. And so we'll see how it plays out from here, and we'll follow along over the next couple of weeks. So other than that, we know we're going to be keeping an eye on the big tech names. Let's just look at Tesla and NVDA and Apple real quick, knowing that the NASDAQ has been a driving force for the entire market. And that's another thing, the other posts that I'm seeing, really what it is I'm seeing bears online on social media. They're making justifications of things. And it's, there's no volume on this move up. And another one is this move up is only because of 3 or 4 stocks. That's the way the market is designed. It's designed so that a number of stocks which have significant weight, and this is why I always say, Apple is the most important stock in the market for me because of its weight in these ETFs, in SPY, in QQQ. It's Apple, it's Microsoft, it's Amazon. Yes, these are major players. And yes, they have, influence over the entire market that is very notable. But that's the way the market's set up. And so, if it's going to be just a few names taking the market higher, it's still the market going higher. And, I see so many times people talking about, it's just price action. I make money from price action, and I don't care why the price is grinding up. If it's grinding up, then the opportunity is with the bulls. And so if it's grinding up because Apple is going up and nothing else is, doesn't matter. It's still going up. So that's my mindset of, just letting the price dictate my decisions and letting the trends of the price dictate my bias. And I don't care if it's just a few names that are making things go up. If I'm focused on SPY and QQQ, if they're going up, they're going up. And the why, it's worth making note of it, but I'm not going to look at it and say, this doesn't count because it's only a few of the bigger names responsible for the gains. The gains are there. So that's that. So Tesla's testing a key resistance level. We failed yesterday, 197.39. And here in pre-market, that level is back in play. So we're going to test that right out of the gate. So if I were looking at a potential top fish as an aggressive bear, I'd give some wiggle room. The top is 197.39 and yesterday was 197.33. I'd be using, 198.01 as a level that would need to break for that to stop me out if I were trying a top fish first thing. But we would need to reject from that resistance and then break support of 194.96 if it's going to be a convincing rejection. So we're right out knocking on the door of resistance. We got hourly EMA 12. We got an hourly uptrend. And again, it's just the only reason that I will take a top fish trade after our first thing on a morning that is against the short-term trends is just because the risk is so low. Just like the bottom fish play with J&J, while it's a swing trade mindset and there's a greater percentage wiggle room before that stop out, it's the same concept. I'm trading against the J&J trade, trying for that bottom. And so there's a potential top fish trying to play against the bull momentum. but there's a clear resistance zone that the bears are attempting to defend. So we'll be watching first thing whether we break that. And if we do, if we do break 198 first thing, we're certainly keeping a close eye on 200 as well. Tesla has had relative strength, relative weakness compared to QQQ over the last few days. And it's not that common. It's much more common when the NASDAQ is leading that Tesla is showing a lot of strength. So it's standing out to me as pretty notable that Tesla is not seeing that relative strength with the NASDAQ over the last week of trading. So keeping an eye on that has to change. We have to see Tesla divided by QQQ here have a solid big green day for us to say, all right, the bulls are back in control and in the driver's seat. No pun intended. NVDA. So up testing resistance as well, 275.89. And pre-market, we can see that we are showing a lot of relative weakness. I got to check back in on QQQ here. QQQ, it gave back that pump. Some of it, only half of it. And we're still right up at the high. QQQ is going to test the high of yesterday, first thing, 316.32. NVDA is giving back a lot more here. NVDA just hit the low of pre-market. So again, that just shows me a small amount of relative weakness first thing. For NVDA to hit fresh lows and be nowhere near its high of yesterday, we're in an hourly downtrend here. If the bell rings and we break 271.65, the hourly downtrend is confirmed, and we're going to be looking for daily consolidation. So there's clearly relative weakness there. AMD also testing the low of yesterday first thing. So pre-market, semiconductors are showing us relative weakness. And as Tess mentioned in chat here, SOXS is the inverse ETF. And it needs to break $17 first thing to confirm the first hourly uptrend in a few days. So if I am going to be looking bearish, again, just like I mentioned, whether you're looking at individual names that you want on Team Bull and Team Bear based on what the broader market is doing, then I can do that for sectors as well. So if the NASDAQ's going to see weakness this morning, the semiconductors pre-market are showing me that that's a place to be looking bearish. And I'll be watching to see the other sectors. Maybe the financial sector shows us some strength if the NASDAQ shows weakness, or maybe it's the healthcare sector. I noticed it towards the end of yesterday, the healthcare sector started to show some signs of relative strength. It was very minimal at this point, but it is something that I'm keeping an eye out on. XLF, another name that bears are going to be watching for an hourly lower high, anything under 32.12. And so with the open this morning, 32.12 is coming into play. But if we fail to break that level, we're going to look for an hourly lower high and then a pullback and an hourly higher low because of the retracement size of this bounce being over 50%. We scout an equilibrium. But if we reject the high of yesterday on the financial sector first thing, we're then going to be looking for this hourly equilibrium to shape up. So I'm not comfortable with long entries with how we're positioned now on the morning. So if I were going to be looking long at this point, it'd probably be on daily consolidation. I look at QQQ that's about to open right at the high of yesterday, and I'd be much more comfortable looking for a daily higher low. So I head into this morning with a bit of a bear lean. Some names that I'm watching for hourly lower highs, whether it's XLF, NIO, or NVDA, next bounce. And if I don't get that set up on the morning, if the bulls do, the bell rings and the bulls keep grinding and they keep their control, then that just means I take a step back and say, all right, this isn't the ideal setup that I wanted on the day, and I will see what Monday brings. But it's essentially a setup right now after going through this rundown with you all where I'm not comfortable looking long. I will be looking short on the morning. And again, if I stop out, with a small loss on a trade or two because the bulls are keeping control, then I'll just pack it up and see the market on Monday. So quick question here. What do I mean by if I sell half, I'm in a risk-free trade? If I have an entry at $10 and my stop loss for the trade would be at $9, if I sell half of my position at $11, I just made $1 gain on half my position. My break even is now $9. So I put my stop at $9 under a key support level. And if it breaks, I'm break even on that trade. So when you lock in a partial position in profit, it lowers the cost basis of your remaining position in that trade. And that is how I structure the entirety of my trading these days over the last 6 years. And I find it very useful to be scaling into and out of positions, more so out. I scale out more than scale in. I oftentimes will make one entry in a position and then exit half, set my stop loss that would keep me in if a key level holds, and then let the trade play out from there. So I appreciate you all tuning in this morning, and I hope you have a great day, great weekend, great end of your quarter. and putting out a video later today about my routines. I did the webinar the other day talking about routines and habits and flow state, and I'm going to keep an eye on our YouTube for